Hey there. If you're a small business owner, you've probably heard about the massive new tax law known as the OB3 Act. It's packed with changes, some that can save you thousands, others that might cost you if you aren't prepared. Today, I'm going to simplify everything you need to know step by step with real world examples. First things first, what exactly is OB3? Officially called the One Big Beautiful Bill Act, it was signed into law by President Trump on July 4th, 2025. It's the biggest update to tax laws since the Tax Cuts and Jobs Act of 2017. OB3 isn't just another minor adjustment. It's a significant law that permanently extends tax cuts, creates brand new deductions, and expands existing ones to better support small businesses like yours. Let's start with one of the biggest wins, the qualified business income deduction, often called the 20% pass through deduction, allows you to deduct a fifth of your qualified business income on your personal return. It's been a lifeline for many small business owners, and thanks to OB3, it's now permanent. So, what's new in 2025? First, the income thresholds have shifted. In 2024, specified service trade or business, or SSTBs, like consultants, lawyers, and accountants, saw phase outs kick in at a higher amount than for non SSTBs. But under OB3, those thresholds drop and align for everyone, both SSTBs and non SSTBs, starting at $150,000 joint and $75,000 single. Second, OB3 guarantees a minimum deduction of $400 if your business profit is at least $1,000. It's a small safety net, but for low profit years, it's welcome. This deduction still has phase outs and restrictions, but with the new thresholds and permanent status, it's more accessible than before, especially if you plan strategically. Let's say Laura is a self employed marketing consultant, a business classified as a specified service trade or business, or SSTB. She earns $72,000 in profit. In 2024, she wouldn't get the QBI deduction because the phase out for SSTBs ended at $65,000. But in 2025, OB3 raises that threshold significantly to $100,000 with phase out beginning at $75,000. Because Laura's income is below the new threshold, she now qualifies for the full 20% deduction, $14,400. That's about $3,168 in tax savings at a 22% tax bracket. It's a big win that makes this deduction newly available to professionals like Laura. Let's move on to equipment write offs. This is a huge deal for businesses that invest in tools, vehicles, or machinery. In 2024, you could write off up to $1.25 million of equipment costs using Section 179. Anything above that had to be depreciated over several years. But in 2025, OB3 doubled that limit to $2.5 million, and the phase out now starts at $4 million instead of $2.5 million. This means that many more businesses, especially growing ones, can write off their full investments upfront. Even better, OB3 brings back 100% bonus depreciation permanently. So whether you're a contractor buying trucks or a cafe upgrading your kitchen, you can deduct those costs all at once. Let's bring this to life with a real-world example. Olive and Oak Design Company invests $2 million in new equipment to upgrade their headquarters. In 2024, they could only deduct $1.25 million right away. The rest had to be written off over time. That gave them about $375,000 in upfront tax savings. But in 2025, OB3 raises the Section 179 cap to $2.5 million. Now they can deduct the full $2 million immediately, saving about $600,000 in taxes this year alone. That's a $225,000 boost to cash flow just because the law changed. Let's turn to a brand new tax break under OB3. This one's designed for workers in tipped industries. In 2024, all tip income is taxable, period. But starting in 2025, OB3 allows employees to deduct up to $25,000 of their tip income from federal taxes each year. For example, if you're a restaurant server or a hairstylist and you earn $20,000 in tips, that income is now federally tax-free, though you'll still pay Social Security and Medicare on it. This is an above-the-line deduction, which means you don't need to itemize to benefit. However, it's available from 2025 to 2029 only and phases out for high earners. So if you're making more than $150,000 as a single filer or $300,000 jointly, note that this break starts to disappear. And remember, this isn't a loophole. Tips must still be reported on your W-2 to get the deduction. Let's take a real-world example. Alice is a restaurant server who earns about $20,000 a year in reported tips. In 2024, she has to pay federal income tax on the full $20,000. But in 2025, thanks to OB3, Alice gets to deduct all of it because it's under the new $25,000 tip deduction cap. She's in the 12% federal tax bracket. So, with this new deduction, she saves about $2,400 in federal taxes without changing a thing about how much she earns. It's real, tangible savings. Her employer still reports tips on her W-2, and she still pays payroll taxes like Social Security and Medicare. But from a federal income tax perspective, those tips are now invisible on her return. Let's move on to another type of hardworking hustle, overtime. In 2024, any extra hours you put in are taxed the same as your regular pay. But thanks to OB3, starting in 2025, employees can deduct up to $12,500 of their overtime wages from federal income taxes each year. And for married couples filing jointly, that amount doubles to $25,000. This new deduction also applies for 5 years, from 2025 through 2029. It's an above-the-line deduction, so you don't need to itemize to benefit. And just like with tips, high earners get phased out starting at $150,000 single or $300,000 joint. Now, let's look at Bob. He works in a warehouse and puts in lots of overtime, about $10,000 worth each year. In 2024, that extra pay is fully taxed, same as his regular wages. But in 2025, OB3 lets him deduct that entire $10,000 from his federal taxable income. At a 22% federal bracket, that means Bob saves about $2,200 in taxes just for working the same hours. The deduction is clean and simple, no need to itemize, and no need to change anything at work. His employer will just need to report overtime wages clearly on his W-2 so he can claim it. While this doesn't reduce the employer's taxes, it absolutely boosts take-home pay for workers like Bob and can make those extra hours more worthwhile. Let's talk about one of the biggest wins from OB3. If you itemize deductions on your personal tax return, OB3 gives you more room to deduct your state and local taxes. The state and local taxes cap, which was stuck at $10,000 since 2018, now jumps to $40,000 starting in 2025. This means individuals can deduct up to $40,000 in combined state and local taxes, property tax, state income tax, etc. However, this cap still doesn't help everyone, especially high earners in high-tax states, since it phases out at $500,000 of income, and it still applies only if you itemize. Now, here's a game changer for small business owners in high-tax states, PTET, or the pass-through entity tax. PTET allows certain businesses, like LLCs, partnerships, and S-Corp, to pay state income taxes directly at the business level. Why does that matter? Because business expenses are fully deductible for federal taxes. So while individuals are capped at $10,000 or $40,000 under the SALT rules, PTT lets you deduct the entire state tax amount, say $50,000 or more, without limitation. So you might be wondering, if PTET gave you savings in 2024, does OB3 change anything? Not directly, but OB3 preserved it and brought momentum with it. Some states that didn't allow PTET before are jumping on board, and many business owners are now taking the time to restructure or opt in for the first time. If you couldn't access PTET before, or didn't know to elect it, 2025 could be the year to start. For example, Georgia introduces PTET in 2025 for the first time, so use it to maximize your federal tax deduction. Let's hit a few more OB3 changes you should know about. First, bonus depreciation is fully restored. 100% expensing is back and permanent. That's a huge deal if you're buying vehicles, equipment, or making property upgrades. Second, OB3 now lets you deduct 3 times more of your startup costs, up to $15,000. That's great news if you're launching a new business, hiring advisors, or securing licenses. Next, a brand new perk. You can now deduct auto loan interest on business use vehicles placed in service after January 1st, 2025. For small businesses that rely on cars or trucks, this is a clear win. Also, good news for online sellers and freelancers. The 1099K reporting threshold is back to 20,200 transactions. That rollback eases paperwork headaches. And lastly, OB3 fixes the R&D amortization issue. Starting in 2025, you can once again deduct eligible U.S. research expenses in full. No more spreading it over 5 years. That's huge for startups and innovators. All of these changes add up to serious tax saving potential. All right, thanks for joining me today. If you found this helpful, give it a like and subscribe for more weekly tips that help your small business thrive.